You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. Masters in Trading Live. I get on here every single day the market's open, 11 o'clock a.m. Eastern Time. Go over the market, share some thoughts once in a while. We're even going to share some trades. We got some trades today. Actually, we got some trade management today. 4 topics, kind of a big deal. What do we got? Jackson Hole is Friday. We're going to talk about Jackson Hole. Yesterday we went over our earnings program and shared all of our earnings results from August. The advanced notice, our unusual option activity program, they said, hey, what about the August trades for us? So today we're going to go over all of our advanced notice August expiration trades so we can do a full review on those trades. And then finally, we're going to talk about the yield curve. A little bit of a history lesson because what's going to happen, guys, walking into September, the Fed is going to lower rates. We are getting to the next phase of this economic expansion or recovery. So let's look at the Fed funds rate and let's look at what the markets have done in the past after big economic shifts. Let's go to the charts. This one's going to be fun. Okay, I have you starting on this first. Let me get a pen here. Wrong way. All right. Okay, friends. Now, we're going to talk about PAS. This is a trade that we shared in our promotional portfolio. Underneath this video, you could see our entire promotional portfolio. This is how we trade. And this is something, pretty similar. So if you look, July 30th, we initiated the position. So July 30th, we first initiated position, the 23s, okay? And we risked $105, okay? When the trade was going against us, we added what's called another tranche. And so on 8/12, 8 days ago, we added another tranche. So your first trade, you're risking $100 or 105. Your second trade, you're risking 117, okay? So the way that you need to look at this is you have $222 of risk. Today, what we're going to do is we're going to sell these 20 calls, sell these right here. If you could sell them for $1.80, $1.85, $1.90, you want to sell for the best possible level that you can. Now, when you do that, this trade goes away, okay? So let's say you sell these for $1.90, okay? You make 72 cents. I'm just going to do some rounding. So now you just are locking in profit and lowering your ultimate risk, okay? We're still holding on to our trade, but what we're doing is we're financing the position. So if you're long the 20s and you're long the 23s, we are going to get out of the 20s and we're just going to hold the 23s waiting for a bigger move. If PAS trades lower, we're going to get back into the position that we covered. This is pretty cool. This is the returns from Jackson Hole. And this is a conference that's been going on for quite some time. So therefore, we can get data. Now, why does this data matter? You can look at it as the S&P return 5 days after. And sure, it looks like it's gone up more than it's gone down. I don't think that matters. I don't care whether it goes up or whether it goes down. But what we have, guys, is we have volatility. Jackson Hole, especially recently, has brought a ton of volatility. Now, we have just gone through 8 straight days where the markets are ripped higher. 2 weeks ago, the VIX spiked, came right back down. Market got crushed, came right back up. There is a ton of volatility in the market right now. What I think is going to happen this week is a big fat nothing burger. I don't think anything is going to go on until Friday. And Friday, guys, I think that we're going to move. This week, you don't want to sell options with your enemy's trading account. You don't want to sell options. You don't want to pick up pennies to risk $1. Instead, you want to be on the long side of options and potentially buy cheap volatility playing for a big move on Friday. So be very careful about that. Our advanced notice program, our unusual options activity program. This is our main tool that we use to find the most unusual option trades in the market. And yesterday we went over our Earnings Academy results for August. Now we're going to go through every single name that expired in August. Now, the rules are that we're only allowed to share trades once they've expired or once we've covered those trades. So I'm going to show you the trades that are closed or covered in August. These are all of our August trades. One, CRTO. We shared this June 27th, which will be right there. We bought the calls. That's all we did. And we bought the 37.5 calls. Now, when you buy one call, it's the same as getting long 100 shares of stock, except that you can do that with a whole bunch of leverage. CRTO, we crushed. We nailed this one. And I covered way too early because we covered about here. And you can see we missed about $5 of the ultimate move, but nevertheless, 245% profit. So that's kind of fun. Pushing on. Reddit. We had a couple of Reddit trades, but our August expiration, I think we had one that expired in June or July, but our August expiration, July 02, which is right here. What do we know about Reddit? Reddit is a lockup trade, okay? Lockup, locked up, lockup. Lockup trades, IPO, first 6 months, they are not releasing all their stock. They're only releasing probably about 10% of the overall stock. After 6 months, all the directors can finally sell their stock. So there's always a ton of pressure on these IPO lockups. 702, we did a trade for $1.90, ended up taking off for $4.10, able to lock in 116% on that Reddit trade. ENVX. ENVX, we have closed in October, closed in August, closed in October. June 21st, June 25th. It looks like this is where we got into the trade. So we have the 21st, which was right here. Okay, so the 21st right here is the first trade. 13 calls. If you buy one, it's weird to put the A first, JR. If you buy one, let's write that more clearly. If you buy one 13 call, it's just like you're getting long 100 shares. When ENVX ripped higher, what did we do? We sold stock at 25. So we're long from 13 and we're short from 25. It's like way up here. Okay? When the market starts to come off, these 25s that we sold for $1.46, we're able to buy back for 15 cents, making 89.73%. The 13 calls in October, long, 207, ended up covering these for $5.50 for 165%. But then this guy, August 14 calls, $1.55, 801. Try to put this on thinking that we get this rally back, but we didn't. So we ended up losing sad face, 801, losing $1.55 on this EN VX trade. We keep going. Rivian. Rivian is right here, 08, 012. Now, 16 and 20. Now again, right? 16 calls, long 100 shares. 20 calls, short 100 shares. Initiate the position, buy it for $1.40, and then sell those 20s for $1.26. Why did we do that? Well, by doing that this way, you have $140 of risk, but then you take in 126. So now your risk is only $14 per one lot. Now, sadly, we ended up losing 100% of that $14 in our Rivian call spread. VST, now this was a bad trade. 508 right here. We did the 90s and the 100s. So we're long from 90 and we're short from 100, right? We need the stock to get its butt up, and it didn't do that. So therefore, we're going to keep our credit here, but we're going to lose here, okay? So we paid $770 for the position, less $440, so you have $3.10 of risk, and sadly, we lost. This was a loser. This was a bad trade. UPST, share a lot of trades, August 25th. Oh, sorry, 717. There we go. That makes more sense. 717, 25 puts, which are right about here. It goes down, and then we lock in our profit for a grand old 100%, getting out at 260. More trades. Oh my God, JR, how many trades are we sharing? This trade, ASTS. You guys may be familiar with ASTS. ASTS has just gone from 3 all the way up to 40. Now it's coming back today, and some of our members are still long puts. We bought puts in this, and this trade didn't work out. But what we did do is while we were buying puts in ASTS, which is a satellite communications company, we were also buying stock in a competitor. That trade is trading $1.33. The competitor is trading right down here. We can't share the competitor because we're still in that position, but we're trading it as a divergence trade. So those are our August positions. Some good, some bad. The great thing about buying options is you can never lose more than you risk. We have 4 programs at Masters in Trading. We have Advanced Notice, our Earnings Advantage program, our Divergence Trader, and our Blockchain. We got this awesome testimonial I want to highlight from Cam. I just want to highlight right here because he says, or she says, Jonathan, lessons are amazing. They're pretty straightforward. But if it was not for getting everything he has to offer, I would not be able to do this. I have spent $23K on other traders' programs and lost so much money. I'm so impressed and amazed at Jonathan's information and the fact that he really cares about our success and asks the time every day to answer our questions. I have never seen anyone like him. I'll be a student as long as he will have me. So just a few comments on that. Every single morning, guys, I check the Discord. I look at it as like a coffee shop in the morning. I want to check in. I want to see how everybody is doing. I look forward to checking it. If anybody has any questions throughout the day, well, the great thing about a community is if I'm available to answer those questions, that's awesome. But if I'm not available to answer those questions, we have, I would say, tens of traders who are more than qualified to answer those questions. And then I'm able to peek my head in there throughout the day on opportunity. So thank you for sharing. Another one upgraded to all access. There's even much more to learn from all the other services being offered. I got one more topic for you guys. And we're going to talk about the yield curve on this topic here. Sorry about the colors. I know the colors are a little bit difficult to read, but what I'm highlighting here is short-term interest rates. So these are like 6-month interest rates, 1 year, okay? That's what this is. And so 08, 09, Fed took rates down to zero, right? All this time, rates are zero, okay? Cost of capital, zero, nothing, okay? Then the Fed starts to raise rates. What do we have? We have COVID. The Fed buries rates, holds rates down for 3 years, and then aggressively moves rates. Okay? Now, let me take off the writing because I think this will be pretty cool. Now, look what I'm going to do here. If I can. No, where's my cool thing? I got to pull up my Thinkorswim for this because you're going to want to see this. Okay, I have my Thinkorswim now, and what I'm going to do here is I want to overlap the Qs. There you go. So look what I've done here, right? The same thing that we were talking about the Fed funds rate, but now look at the QQQ. And when the Fed makes the cost of capital nothing between 09 and 010, there's one way for the market to move. The cost of capital is absolutely nothing, nothing, nothing. As the cost of capital raises, the market takes a hit, okay? We walk into COVID. They pour so much money into the economy that it forces everything to rally, okay? The market rallies into a high cost of capital, maybe because of AI, because of technological expansion or whatnot. But what I want to show you guys is we are going to get to a new cycle. And the new cycle is COVID, rates down to zero. From 23 until today, they've taken rates up to 5.5%. Now the Fed says by 2026, they want to get rates all the way back down. That's going to cause a ton of volatility. That's going to cause a ton of uncertainty. So when I look at the market right now, you hop back on. So when I look at the market right now, this week is a dead burger. Like nothing is going on. Everything is waiting until Friday. The QQQs, we have our line in the sand at 475. Let me just double check that. Going off screen a little bit here. 475. I think the market will probably go into Jackson Hole right around that number on Friday. For all access, you guys hang on. Actually, yeah, for all access, you guys hang on. For everybody else, thanks so much for watching.